Can using Heiken Ashi candlesticks help you with your technical analysis? Well, that's the question we're going to talk about today, so let's get into it. So good afternoon, everyone. It's 4 p.m. on Friday, March 24th, 2023. Hope you had a good week. And just wanted to talk a little bit about this subject here. Now, last week I did a video using the line chart to help quiet down some noise when looking at trends and price patterns and potential places to enter on a trade. And so that's still a really interesting subject. So if you didn't watch that video, you can go back and watch that. That was the last one I posted before this. Again, in using a line chart just to visualize trends and corrections, not necessarily for entry points, but for just the bigger picture. So when talking about Heiken Ashi candles, so on the left is a Heiken Ashi chart, and on the right is a regular candlestick chart. Now, for those of you that don't know, you can just Google Heiken Ashi and you can find all kinds of stuff. But basically what Heiken Ashi means is average pace. So it's basically it's an offshoot of Japanese candlesticks. It just uses a little bit different formula. And so it basically takes price based on the open and close data from the last period and combines it with the open, high, low, close from the current period to create a combination candlesticks. And the purpose of it is basically to try to smooth out a little bit of the noise in the chart. Okay, so during a trending phase, it'll filter out a lot of those candles, that counter trend candles that might pop up in the middle of a trend, where if you're in a trade, and you see that candle, maybe you're tempted to jump out. Where in a Heiken Ashi chart, a lot of those will be filtered and you'll never see them. You'll just see the Heiken Ashi candles in the direction of the trend. And when it comes to corrections and figuring out when to get back into a trend potentially, Heiken Ashi candles can potentially prevent you from getting in on the resumption of the trend a little bit too early. Now, on the flip side of that, they can also, in terms, especially when it comes to getting back into trends, they can be a little bit late versus a regular candlestick chart at some points, where you might get in one or two candles later than maybe you would with a candlestick chart. But there are times when, that will actually save you, because you might see a candlestick on a regular candlestick chart that maybe talks about you that looks like it's time for you to get back into the trend. You jump in, and then the correction continues, and you end up getting stopped out, or just, having to withstand a lot of drawdown. So Heiken Ashi candles can filter some of that too. So we'll look at a couple of charts and just see what the difference are. If you've never played around with Heiken Ashi candles, they're available on pretty much any trading platform. Now, in MetaTrader, you do have to get an indicator. It's basically a custom indicator to allow you to plot Heiken Ashi candles. But they're free. Again, you can find them very easily. It's just an indicator plugin. But on more advanced charts like TradingView, etc., Heiken Ashi candles are one of the many different types of price displays that they give you. So you don't need to do anything. If you have an advanced platform, again, like TradingView, Heiken Ashi candles are already available to you in the platform. So, all right. So what you have here is the euro dollar. It happens to be a 15-minute chart. On the left, in the bright red and blue, you've got Heiken Ashi candles, and on the right, you have a regular candlestick chart. Now you can see here, if you look at it very quickly, there's really not a lot of difference. Okay, but there are a couple of things to notice. So let's talk about just some of these trending phases. Now again, this is all hindsight, so I understand that. But so if we look first at over here on the right, on the regular candlestick chart, and we'll just look at this area right here, okay? Let's actually draw out some of these trending phases, okay? And we'll compare them to the other side, okay? Now you can see in this trending phase right here, we had price starting to go down, and we had these two bullish candlesticks formed. Okay, when if you look over here on the Heiken Ashi chart, it's still red the whole time. So if you did get in over here, you wouldn't have had any risk of saying, oh, I need to get out right here. And it's the same thing right here. You have these this little pause right here in this impulsive move down, where on the Heiken Ashi charts everything stayed red. And then same thing down here on this bigger move down. Now we did get one little blue Heiken Ashi candle right here, but you see it's very small. It's got a tall wick, and hopefully you would have just ignored that. So that's what I'm talking about with them smoothing out the trend, and kind of keeping you on board the trend for as long as possible. Now, if we talk about corrections, okay, so we'll look at this one right here. You can see, when this started to trend up, if you were in this, now assuming you didn't want to just hold it through the correction, let's suppose, you were looking at getting into this on this leg, or you missed this first part and you're looking for an entry. So we have this move up here. So if you were in this and you see this blue candle here, this probably would have been your exit if you were looking to get out and not hold it. Okay, and you can see the difference here, right? As this correction starts to go up after these first little tiny candles here, you can see this is all blue all the way up, whereas on the candlestick chart, it's blue, red, blue, red, blue, red. It's a little bit confusing about, hey, where does the resumption of this downtrend happen? Okay, if you had gotten in, say, on this candle, this bear candle, thinking, oh, it's going to end right here, and you put your stop here. Now, maybe you wouldn't put your stop that close. This is only a 15-minute chart. But just for the sake of argument, you say, okay, well, here's the entry, or here's the entry. Well, it's not. It kept going, and it was finally not until up here when we finally had an entry. Okay? Now, if your bias is to the downside, then what you're going to do is be waiting for a move to confirm back down. Now, on the Heiken Ashi chart, you can see it was blue all the way up, so there wouldn't have been any entry to get back short on this pair, until at least in here. Okay? Now, where you choose to get in after that, well, that's your decision. Some people want to see a structure break, or you might wait until it breaks below here. You can also, of course, do that on the regular chart, okay, where you would get in, after the break of this structure right here, okay, and you'd get in down here in the close of this candle or over here. But if you wanted to try to get a little better fill earlier on, then the Heiken Ashi chart could have really helped you with that, and keeping you out of getting in too soon, and really kind of pointing to say, hey, here's a better place to get in here. All right? Now, one of the things that Heiken Ashi charts can do as well is kind of give you at the bottom of a trend or at the top of a trend where you might want to consider exiting, even if you want to wait for the turn, is to look at these group of wicks. So over here, when we were coming out of this uptrend right here, and then all of a sudden the Heiken Ashi charts form at least two. You want at least two of these Heiken Ashi candles with wicks that are, obviously show things running out of steam here. And then we get the red one comes in here, and then this would have been your exit. So that is similar to the regular candlestick charts. We have the blue bullish candles here, and then we have this bearish candle down. So right here probably would have been your exit. So like I said, there's a lot of similarities to them. They're not completely different. And again, there's no magic to this. I find the best place to use Heiken Ashi candles is when the market is trending. It helps keep you in the trade so that when you get those inevitable pullbacks that in real time in the middle of a move might scare you into exiting to say, I see a counter trend candle. I've got some profit, and I just want to take my profits off the table because I don't want it to turn and go against me. Where Heiken Ashi candles can really help keep you in those trades and say, it's okay. It's still trending down, and there's no need to get out of this trade. Okay, and, these three trending areas right here, really point to that. In corrective phases, the best place to use these, Heiken Ashi candles is, deciding where the correction ends and where the potential re-entry is. And you can see where price is currently right now, okay? These look pretty similar, right? We had this impulsive move up right here, okay, on this correction. And now we just kind of move sideways. And it's pretty much the same whether you look at the Heiken Ashi chart or the regular candlestick chart. So, again, I find that the most helpful place for these is in the trending phase, maybe not so much in the corrective phase. However, in the corrective phase, it can help you, avoid getting back in too soon, as I mentioned before. All right? I suppose we can look at another one here. So here's the pound Canadian. I just pick one randomly here. Okay, and again, I don't have, well, actually we can just do this. So here's the pound Canadian, and we've got this, move up, and you can see on this impulsive move up, other than these couple little tiny little Heiken Ashi candles, we had a really strong, impressive move here. Now, if I just throw a regular candlestick chart back on here, okay, it's a little bit less clear because, then you've got these bearish candles, there's more of them showing up, and then you start seeing a lot of really small bullish candles even in the direction of the trend. And again, more places with bearish price action. Instead of just having those two little tiny ones, we've got basically 1, 2, 3, 4 places on this way up here where we have, potentially bearish price action and a lot of little really small candles that might convince you that, hey, this might not be the best place to remain with this trend. And so, that's the thing. You can see putting the Heiken Ashi candlesticks back on, just seeing that they stay blue is enough to keep you in this trade. And then, on this corrective phase, okay, coming down here, again, you can kind of see, the red, lower highs, lower lows, more bearish red candles. And then at this point right here, you can put a trend line on here, and this would be your re-entry into this trend right here. And if we put the regular candlestick chart back on and look at this area, it's pretty much the same thing, okay? You can put a trend line here. This candle right here would have been your re-entry, okay? So, again, I find Heiken Ashi, the best place to use these is during the trending phase. Once you're in and the trend starts to move, this gives you a really nice visual to stay in the trend. And I also think in terms of corrections, it helps you visualize the corrections a little bit more. It's just these just pop out more, to you because the contrast between these colors is really obvious. And so even though this shows you pretty much the same thing as the candlestick chart does, I think this is a little easier to see and a little bit easier to see when this ends. And you can see rapid, blue Heiken Ashi candles taking over here. And this is your signal to go ahead and get back into this trade to the long side. Okay? So, we can really look at anything here. Here's Aussie Yen. Now, this is a Heiken Ashi chart, too. I just changed the color scheme just so we can keep everything consistent. Let me put this template on, and this will change it to the red and blue. Of course, you can change these colors to whatever you want. So, again, you can definitely see the corrective phases versus the impulsive phases. Like this impulsive phase, no red candles in here at all until you get to here. So, and this is really not an exit. So you could have held on to this, and then maybe once you break a structure zone, like maybe up here, this would be your exit, maybe right in here. Okay, where if we put the regular candlesticks on, let's see what we get here. Okay, now this one's pretty impulsive, so we don't get a lot of bearish candles here, but we get a little pause right here, but this is pretty impressive on the way up. So again, guys, this is just an option. I think this is a really good thing to use if you're really a visual person and you really like to just be able to just look at the overall pattern and the overall trend and not really get into the weeds about exactly where the entry and exits are. But you're just looking at like, okay, what's price doing? Where's the larger trend? Where's a good entry and exit point? Where are those structure areas? Instead of analyzing every little possible move during either a correction or an impulsive wave, I think Heiken Ashi candles work really well for that. But like everything else, guys, it's not a magic solution, and you have to use it in conjunction with the rest of your skills, whether it's using higher time frame analysis or what have you. This happens to be a 4-hour chart of the Aussie yen, so you can obviously look for these areas on the chart where there's corrections. Like, if we put a rectangle on this 4-hour area right here, and then we maybe drop to a 15-minute. Well, here's that area on the 15-minute, right? Let's close up this box a little bit. This was that high we just looked at on the 4-hour. And, you can see right here, it's very clear to see the structure break, right? It's actually a little bit higher than that even. Somewhere in here, it's very easy to see this structure break, right? You can see the Heiken Ashi candles break, and then right here would have been your entry anywhere in here. You could have been a little more aggressive here or wait for this one, and that's it, right? And I just think it pops really nice. And then you can clearly see this is corrective, right? Because it's not making a lot of progress. There's a lot of little wicky candles here. There's, green and blue, blues and reds, and and then all of a sudden price breaks lower again, and you could have had your entry basically right back here again. So I think that's the advantage of Heiken Ashi, is within the trend primarily to stay with a trade, and also just gives you a brighter, I think, cleaner visual about exit and entry points than a candlestick chart might, because there's always a little bit of room. I think there's more room for interpretation with candlestick charts because of the size of the candles, the wicks, the interwoven, bullish and bearish candles, candles interwoven really close to each other, and kind of making you question a little bit. Whereas Heiken Ashi, is a little bit cleaner, and because it takes that average, the average of everything, and just kind of keeps everything smoothed out a little bit, I think they're really good. So it's just an option to consider, guys. Again, you can easily put this on your chart. What you want to do in MetaTrader is to make sure you're only seeing the Heiken Ashi candles. You just want to make sure. Oh, hold on, guys. Sorry, guys, I'm professional, but my dog was barking outside. I had to go get her. So, like I was saying, guys, you can easily put this on your chart. And like I said, in MetaTrader, you just want to make sure you go in and turn off your candlesticks and your line chart, because if you don't, it's going to look really bad, because in MetaTrader, this is considered an indicator. So what it does is it overlays on top of where the candlesticks would be. So if I didn't turn off the candlesticks, this would look terrible. You would see the underlying candlesticks underneath it, and it would look awful. And even the line chart, you want to go and turn off the line chart too, and just make sure that that you're not seeing that. So in the settings, in your chart settings, you can see what I did is I switched to line chart right here, up here at the top. I have this click for line chart. And so this way here I can leave my candlesticks alone. I switched to line chart, and then I just went in here and turned off the line. Okay, I just clicked none. That gets rid of the line chart. Okay, and then you can actually leave your candlesticks as long as you don't click back. If I click here, now you can see what happens, right? So here's just the Heiken Ashi. If I click on candlesticks now, you can see it kind of overlays the candlesticks underneath of it, and it just doesn't, I don't know, it makes it a little bit more confusing because you can see the underlying candlesticks. And again, it takes away from the purpose of using the Heiken Ashi. So you just want to make sure that's all you're seeing on the chart. If you want to compare them, then do what I did at the first one, where you just kind of pull two charts side by side, one with a candlestick, one with a line chart. If you want to look at them side by side, just pull two charts of the same instrument on the same time frame, and then you can look at it that way. All right? So I'm going to leave it there, guys. Have any questions, comments? What's your thoughts on this? Do you use Heiken Ashi at all? Have you looked at the line chart only? What do you think? Is this worth it, or do you just like using regular candlesticks, or do you like something else? So let me know in the comments, and just go ahead and smash that like button to help me with the YouTube algorithm. And if you're just finding the channel, hit that subscribe and ring the bell notification down below so you get notified when I post new videos, which is about once a week. That's about what I do lately. All right, and I hope you guys have a fantastic weekend, and we'll catch up with you soon.